So look, as a fractional CFO, I spend a lot of time helping founders get their businesses future ready. But the truth is that without an accurate record of all the stuff that's happened in the past with your business, predicting the future is a complete waste of time. Welcome back to Profits on Purpose, the podcast for e-com and CPG founders who are looking to scale their businesses both profitably and purposefully. I'm your host, Nate Littlewood from Future Ready CFO, where I specialize in helping founders go from a state of financial chaos and confusion to one of clarity and confidence. Anyway, today's guest is Stephen Brown, who's the COO and co-founder of LedgerGurus, which is one of the leading e-commerce specialized accounting firms in the country. Now, if Stephen's voice sounds familiar, it might be because I was actually recently a guest on his podcast, and we spent some time talking about all things, financial data and how to make better decisions. Today, we're going to be flipping the script. Stephen and his team work with hundreds of 7- and 8-figure e-commerce brands, which means that he has seen just about every bookkeeping and accounting issue that you can imagine. In today's conversation, we'll be talking about how much an e-commerce brand should be spending on accounting and when. We'll be covering the most common mistakes he sees founders making and some of the unique ways that bookkeeping and accounting can facilitate growth. Stephen, welcome to the show. It's great to have you here.
Thanks, Nate. I'm glad to be here.
Of course. Well, I always like to start these conversations talking a little bit about the backstory for folks who haven't had the pleasure of, following you or unfamiliar. Tell me a little bit about the business and how did you come to be doing this?
Yeah, so it's a circuitous path for me. I think we discovered on my podcast episode that you and I share a common origin story. We both are civil engineers by education. You actually worked in the industry. I did not. I got sucked into enterprise software around the .com days, and eventually married a CPA. And she was the one, my wife, Brittany, she started the business. I helped her a little bit in the early days, but she had the idea, was a fractional CFO herself, but decided not to start a fractional CFO business. She said, I want to start an outsourced accounting business. I actually she went to a conference. It wasn't even, it was just kind of outsourced accounting. Now it's in the industry, it's known as client accounting services. Heard somebody talk about it, said, I want to start one of these. And I was like, that's cool, and I helped her on the technology side because I didn't think it was going to be this big of a deal, but 2 years in, it became more than she could do by herself.
Yeah. And
so I quit my day job and we went all in on growing this business. And that was about the same time that we started to specialize in e-commerce. So that's about 10 years ago.
Wow. Well, it sounds like you've had quite the ride since then. Tell me, what is significant about being an e-commerce specialist for someone, from the accounting world? Like, why does having an e-commerce specialized accounting, person helping you, why does that even matter?
Every industry has its issues. One of the reasons we decided to specialize is we were, like a lot of accounting firms, we were just taking anybody who would be willing to give us their business. And we started to see challenges in different industries, and we said, we need to specialize. So we spent a long time and ended up on e-commerce because it matched our business model and kind of our ideas. But as we started digging in really hard, we had a couple existing businesses. We realized there's some key challenges. Revenue accounting for an e-commerce business is a lot harder than, just a vanilla services business or even like a brick and mortar store. There's lots of challenges on timing a payout. The second thing that's really challenging we've been chasing this white whale for years now is the inventory and cost of goods sold accounting. Inventory-based businesses are just inherently more complicated. And so that's another thing. There is oftentimes the third leg is sales tax is a big challenge. for these businesses. It wasn't in when we started, and then they had the big Supreme Court ruling that changed the game, that really opened the door for multi-state sales tax. And so multi-state sales tax compliance is a big challenge. And then on top of that, you get you're dealing with some currency stuff. And then I would just say e-commerce is a very dynamic industry. There's always another sales channel or another marketing channel. And each one of those brings unique accounting and finance issues. And so I feel like whoever is supporting a business from an accounting or finance perspective, there's these constantly changing dynamics, which is both fun and annoying at the same time. But all of that means there's a lot of complexity that you don't get in many other industries.
Yeah. Okay. Makes sense. So I had a call with the founder, it was maybe 2 weeks ago, and we were chatting through his business, going pretty well. Like, he said he needed some help with the finances. I was like, okay, let's chat. Through this conversation, he tells me that, he's doing about 1.3 million of sales, and, got to the end of the call and we're talking about next steps. And I said, okay, well, why don't we do a review of your financials? And, I'll tell you what I see, and then we can reconnect in a week. It's, my usual sales process. We got to this point in the conversation and he says, yeah, I don't actually have any books. Like, there's nothing for you to audit. He'd gotten to 1.2 million of sales. He had no bookkeeping and accounting system in place. So there was nothing for me to review. I'd love to get your perspective on what the evolution of the bookkeeping and accounting stack should look like as you're going from just starting out, getting into seven figures, growing and evolving, hopefully to 8 and beyond. Like, how much should people be paying for their bookkeeping and accounting, and what are the different kind of choices and options that they have?
Yeah, one of the challenges comes back to that complexity. It's inherently more complex than a lot of industries, and often you can't pay what you need early on. But I would say, and there's some shortcuts you can take early on. But I would say at minimum, you need accounting software, a general ledger where you're going to capture things. If you wanted to save some money early on, you could do everything at a cash basis, which is just to record transactions as they are hitting the bank account. And that'll be good from a tax compliance perspective, but it's not going to be very helpful to understand what's going on in the business. Yeah. As you start getting into, hey, I actually want to know my profitability on a regular, on a more detailed basis, on a month-to-month basis, then you need to start looking at things like, revenue accounting. We use A2X is the tool we've been big fans of. There's others out there, but that's one we really liked, and they do a lot of the accounting of payouts, of what's behind the payouts, all the fees, getting the timing right, so you can actually see this is when sales actually happened. When you get into inventory and cost of goods accounting, that's a whole nother ballgame. Like, the best outcome is to use inventory management system, but again, those can cost, they can quickly get up to hundreds, but there are some lean ones that are less than that. The bigger issue with that is less the software and more the processes. What do you mean by that with the processes? What are some of the process upgrades that a business needs to have? With inventory, and this is, we have a lot of peers in the industry who don't do inventory accounting, who just tell the customer, you give me the value at the end of the month. And we have been, for better or worse, like Captain Ahab chasing that white whale. We were like, no, we're going to help you get where you need to be. But the problem with inventory is inventory accounting is not just an accounting thing, it's an operations thing. Because you really need to be thinking about inventory along all areas of the journey. So that starts with purchasing, it continues with the import process, then it gets received, then it gets, you need to be tracking. You're like, it's in the warehouse. We just have to track when it ships, which alone can be a problem. But then you have all these little small things that it can add up, like damages, theft, loss, returns, inventory used for like marketing or influencers. And those can be kind of small, but if those aren't tracked, you'll go to do a count at the end of the year and you're doing a 10% adjustment. You're like, where did it go? Well, it wasn't tracked really well. And so there's all these different processes, even if you're using a 3PL, checking in on your 3PL. And where we've seen problems is, we'll go through do inventory accounting, and then we'll do a count and it doesn't, or the customer does the count, we'll do the adjustment. And they're like, hey, why do we have to write off 10% of our inventory? And occasionally we'll dig in, if they're willing to pay, and we'll be like, okay, this, and this, these weren't captured, these processes weren't done. And over time, those add up to material amounts of money. So an inventory management system is great because they're designed to help manage the data through those processes, but they're only as good as, the processes that you're executing around those systems or through those systems.
Yeah. Okay. That makes sense. So when you're taking on new clients, people rock up and I'm guessing they maybe come to your doorstep and sheepishly say, hey, I got a bit of a mess here. Like, can you help me clean it up? What are some of the most common, mistakes or issues that you find with their books?
It's probably the areas of complexity that I talked about earlier. The revenue isn't being accounted for accurately. The cost of goods sold is a mess. It's not accurate at all. Sales tax compliance is not happening.
Yeah.
Those are the often every mistake, but I'd say you could expand this to almost every small business owner. You see stuff like they're mixing personal and business expenses. They're not tracking things very well. Like these are just common small business owner mistakes that you see as well. And sometimes they're willing to change and sometimes they're not.
Yeah. Okay. I see. And do you guys have any preferred technology and tools? Are there specific softwares you work with, or?
We do. And I would say, as I kind of outlined the stack that we like to support, I'd say there are alternatives out there and some of them are great. It's just we chose some of these for a variety of reasons, but we like QuickBooks Online, but Xero is a great tool as well. There's nothing wrong with that. We like A2X for the revenue accounting. There's a couple different inventory management systems that we like, but there's so many out there. There are we've used a lot of Avalara, but there's some other sales tax software we've used in other cases as well. And then you get into kind of just a lot of other things like payroll and bill pay, banking. There's a lot of interesting things in that space that aren't some that are e-commerce specific, some that aren't, but they're all good. We're a little bit more open-ended in some of those areas, but I am seeing, like, I'm really intrigued by HighBeam right now and what they're doing with banking and just the financial stack in general. There's just a lot going on, and there's a lot more that needs to be solved. So those are the things that some of the tools that we use that are e-commerce specific, but there's a lot of other things that we use that we're a little bit more open. If somebody was like, what do I use for payroll? I'd be like, well, Gusto's really great, but there's a lot of other tools that are pretty good too. So just use something good, right?
Gotcha. So I have quite a few clients on Finaloop. Do you work with that at all? Do you have an opinion on it as a platform?
Yeah, Finaloop is doing a really interesting thing. They have really worked more with the outsourced CFO community than the outsourced accounting community. They're a little bit of a closed system. I like the concept of Finaloop a lot. There are some things I think are challenging though. I mentioned earlier, I spent my time in enterprise software almost 2 decades before I jumped onto the finance world. And I'm a big fan of open systems and open platforms and open ecosystems. And so one of the challenges of Finaloop is trying to build everything. And I think that's really hard to do because you can rarely build everything. And so having a platform with integrations of other apps is really important. And that's where I think QuickBooks and Xero really shine. Intuit, ironically, is becoming a little bit more self-focused and not they've shifted from being really ecosystem friendly to a little bit more we're going to build it ourselves, and I just think it's a mistake. I hope they change course, because platforms and open systems are always better than closed systems, in my opinion.
Yeah, true. Okay, makes sense. And what would you say to founders who are thinking about bookkeeping and accounting as a cost center? And, I come across this a lot. People like, this is just something that I kind of have to pay for. I'd rather be spending it on ads or inventory or something else. Like, what's your perspective on the investment that people are potentially making in having good books?
Oh, I feel like there is a level of investment that you have to make before you start getting that return. But as you start getting good data, I mean, like you said it yourself, like it unlocks insights if you're willing to look for them. And you and I talked about this on my podcast about, I'm trying to remember what you called it, the maturity cycle, what those, there was
four phases. Yeah.
The 4 phases of, what do you call that? I forget the terminology.
I don't know that I really have a catchy name for it, but
we need to come up
the four phases of your evolution of your relationship with finance, so I guess.
Yeah. It's kind of like and I think if I remember right, it was really quite great. It was ignorance, right? That was phase 1. Was that what you called
denial or ignorance.
Denial, then overwhelm, curiosity, enlightenment.
Yeah,
like this is an amazing framework. The reality is there's this, it's an open club. There's this club you can be a part of, and it's called knowing how to run a business. And in big businesses, the people up top, they're part of that club. They know how to read financials. They know what they're telling them, whether it's the CTO, the VP of marketing. I worked in some publicly traded companies and some large private companies. Those people, they have to know what the financials mean. If they don't, they're going to be excluded from certain elements of the conversation. And so for small business owners, it's like, this is an open club. There's no secrets to getting into it. You just have to spend a little bit of time to cross over the chasm of some of the weirdness of accrual accounting. But once you do, it's more than just a club like in a big business where I can now talk shop with those. No, now you get to see what these savvy folks see. That you get to see the insights that this data is telling you. And that insights is a map that can help guide you on your journey. And so using your model of allowing yourself to be stuck in denial or overwhelm it's a tragedy, because if you can push through getting into curiosity and then into enlightenment, you are going to be a much different business owner, a much different business leader, one that there's no guarantee for success, but the odds of success, I feel like, are going to go up significantly, because you're going to see things differently. You're going to understand your business differently.
Yeah.
That's what I would tell somebody if they're like, it's just a cost center. It's just for the accountants to, send data each other so they can file taxes. And I'm like, you're missing out on something that can be life-changing.
Yeah, totally. So if a founder has bought on to that idea and they are invested in the data and the insights and wanting to understand their business better, when they start to look at the various metrics and ratios, I mean, it's easy to get overwhelmed by all of these numbers. There's literally hundreds, if not thousands, of different calculations that one could theoretically do with all these numbers. What are some of the most important ratios or metrics that an e-commerce founder should be watching? If I gave you, say, a list of, 3 or 5, what would you put up there on that list?
3 to 5. I would say, so on the profit and loss, I want to look at some key income ratios, which are certain categories of spending divided by the revenue. So that becomes a ratio. I would say your gross margin, or you could also say your cost of goods sold as a percentage of income, but gross margin. How many dollars do I have after paying for the costs of the goods is really important, because that margin can really dictates how much you can do in terms of marketing and payroll and everything else. Watching that very closely. And I like for brands, I feel like there's a wide range. I'm not sure if I came to my own set of numbers. I don't know if you have your own benchmarks, but I spent years trying to figure out what is that range. And I felt like the number was about, let me make sure I get this right, 40 to 80% gross margin. Now, 40%, you're probably a reseller. And because you don't have pricing power when you're reselling somebody else's brand, and you're going to be really limited in what you can do. I'd say 40% is barely viable, but it is viable. If you look at some really big retailers, I think Costco has like a 10% gross margin. It's something ridiculous.
Wow.
I think that you might have to check me on that, but I was looking at them. But they're making up for it with volume. So these super huge, discount retailers like Costco and Walmart, they're getting very little margin. And then that works for them though, because they have just tremendous volume to offset their fixed costs. But a small reseller, like you got a little store online, you set up a little Shopify store and you're just reselling somebody's goods, you don't have that luxury. So 40% is really bare bones for a DTC brand. So like you come up with a product idea, you go out and either manufacture it yourself or you source the manufacturing. You have a unique brand. You have a product that is somewhat unique. Usually you're going to want a higher margin profile. I feel like it's about 70-80% gross margin because you're going to probably need more dollars for customer acquisition.
Yep.
And so that's the second one is what is your marketing, or I hone in more on advertising, but I think you could also expand that to total marketing spend. What is your spend as a percentage of revenue? If you're a reseller, all your dollars got taken up in cost of goods sold. So you're going to have to do customer acquisition using SEO, using product listings, using social media, whatever it is, community building, more free or low-cost customer acquisition methods. If you're a DTC brand, that's probably not going to work because nobody's going to know what brand XYZ is. You're going to have to go out and find your buyers, and that's where advertising becomes much more critical. And oftentimes, they're spending 20 to 33 or more % of revenue on marketing and advertising.
Yeah.
So that's the second one. The third one I like to look at is fulfillment. How much am I spending on fulfillment as a percentage of revenue? And I like to see that between about 10 and 15%. So within those those three metrics, I feel like are the secret to profitability. If you're checking the box on all three of those and not doing very well, it's usually pretty easy to find out why not. It's usually payroll or I see three reasons people stumble in that area. One is payroll. They've got way too much payroll. Second is maybe they went out and they got this huge loan to start the business, had all these aspirations, and the debt service is just really burdensome. Yeah. The third reason, and I don't see it as much anymore, is lifestyle. But I saw it a couple years ago. They'd be like, bougie office, they're bringing food into the office every day, they're going to every conference known to man, they're just living it up. I don't see that as much anymore because I think the pressures on profitability have squeezed that out of them. But usually if you've got those three key components of the cost of goods and the cost of sale dialed in and you're not profitable, it's payroll, sometimes interest expense.
It's a good list. I'm surprised that cash conversion cycle wasn't on it.
Well, I'll get there. So those are my. So sorry, I took a little detour into some others. So those are the three, and then obviously you want your bottom line profitability. There are some other intermediate margins that you could look at as well, but I don't always introduce them because they're a little bit more confusing. So, the contribution margin is really an interesting measurement, which is really your dollars after your cost of goods and your cost of sale.
Mm-hmm.
And this one, you could probably talk to a couple different people and have a different answer. I think the more traditional way of measuring that would be, I'm going to take what's left over after cost of goods, fulfillment, merchant fees, which tends to be small, and yeah. But I also like to add in contribution margin after advertising,
Mm-hmm.
and see what is that. And what that tells me is every time I make a sale, what's left over? Is it 40 cents on the dollar? You're doing pretty good. Is it 20 cents on the dollar? Not so good. Is it 5 cents on the dollar? You better not be scaling that business because you got to dial some things in first.
Mm-hmm.
But that's kind of an advanced concept I don't always introduce right out the gate, but I think it's a really important. Another one that can be interesting is your operating margin, depending on how you're treating other expenses and income. But again, that's more of an advanced concept. But if I had to just pick like 4 on the income statement, I'd be like gross margin, fulfillment percentage, advertising percentage, and then bottom line net margin.
Mm-hmm. Yeah.
On the balance sheet, it's cash, inventory, but a lot of times inventory is garbage. So you can have an inventory balance on the balance sheet. 9 times out of 10 when they come to us, probably 95% of the time, it's not good data. So it's good to track, but you got to get the data right first.
Yeah.
Beyond that, you mentioned, I am a huge fan of cash conversion cycle. I don't always introduce it to people right out the gate though, because they have to have good data to get it calculated right. And usually when you have bad inventory data, your cash conversion cycle's bad too.
Yeah.
Because it touches on both the balance sheet and the income statement. But within the cash I feel like, I don't know about you, Nate, I feel like there's so much that's told in the cash conversion cycle.
There is, especially when you look into the individual components. Yeah.
Yeah.
You can learn a lot from it.
And those components are your days inventory outstanding. This usually is the biggest piece. How long is inventory tied up? Or how long is dollars tied up in inventory? You know, think about it. You put the dollar in, and it's going to manufacturing, and then it has to be shipped to your warehouse, and then it sits on the warehouse. And you're paying storage fees on it potentially until it comes off there as a cost of goods sold. And most of the time, the way I talk about cash conversion cycle, I'd be curious how you talk to people, but I try and dumb it down. I remember learning this concept in MBA school, and I said, I don't ever want to calculate that again. That was horrible. That was like the worst exercise. It's kind of like, when we had to, I don't know when you first learned structures, I was like, this is awful, how to calculate. I remember I had to design a building, and you'd put in the parameters, you'd do all the math, and this was the 90s. So we had spreadsheets and we had computers, but it was basic. And then it'd be like, my design failed. I have to start over again. That's kind of how I felt about cash conversion cycle until I got into e-commerce, and I was like, this is the greatest thing in the world.
Yeah.
The way I like to explain it to people is it's a representation for how long your dollars, when you put dollars into your business, how long it's going to take before they come back out in the form of not sales, but cash received from sales.
Mm-hmm.
And the longer that number is, the more you're going to need to have cash available, either in the form of cash from profits, cash from investments, or cash from debt, to sustain your business.
Mm-hmm.
That's how do you like to describe cash conversion cycle?
I usually start off by telling founders to imagine that their business is a pipe, and what we're doing is putting money into one end of the pipe in the form of inventory, and then taking money out of the other end of the pipe as receipts from customers. The length of the pipe is essentially your cash conversion cycle. And the problem with having money locked up in that pipe is that you can't use it for anything else. So you can't use it for advertising. You can't use it for hiring people. You can't use it for any other growth initiatives. It's just locked up in that cash conversion cycle, and you've got to wait for it to come out the other end before you can, make a decision about what else you might like to do with it. So when you have a business that is cash constrained, which, most bootstrapped early stage e-commerce businesses are, what we want to be doing is moving cash through that cycle or through that pipe as quickly as we possibly can. Because the more times we can move money through the business, the more times we can, reinvest it in inventory, make new decisions about, hiring new team members or, whatever else we might want to do.
I love that analogy. You've got great analogies and frameworks, by the way, Nate. I love some of these concepts that you've shared with me.
I appreciate the feedback. I think it might come from a lot of posting on LinkedIn. When you have to, put this into a LinkedIn post blurb, you kind of force yourself to think about, okay, what's a good hook on this? Like, how can I explain this in a way that forces, makes it understandable for someone who's scrolling on their phone? So that's probably where it comes from. I would love to pick your brain about profit first.
Yeah.
My understanding is that you may have actually implemented it for your own D2C brand. What is profit first methodology, and why should people care about it?
Yeah. So as a little background, a couple of years ago, my business partner and wife here at LedgerGurus, we wanted to go have our own brand that we could use to experiment. And we decided, let's go buy one. We had our marketing guy at the time who was interested in going and doing his own thing. And so we said, hey, hold on a second. Why don't we collaborate? You can do it. We'll help, find a business. He wanted to buy, and we were cool with that. We said, you run it. We get to tinker with it. We bought a little Italian skincare business, and he had all the great ideas. He's like, we're going to throw all this money at agencies and creatives and just turbocharge this thing. And it didn't work. It just didn't work. We were post iOS 14.5. And so we spent months burning money, putting more money into the business, just losing, on a profit basis, okay, we got to put more money in the business, And we were getting a little bit tired of that. We weren't able to pay our partner anything. Literally, he's working for free. We're all putting money into the business, including him. We at least had income from LedgerGurus. His wife worked, but we're like, dang, me and Brittany were starting to get worried. We're like, crap, he's going to get tired. He's going to want to quit on us. And around that time, I finally decided to read Profit First. I had heard about it, and I'd always poo-pooed it because I was like, that's a stupid thing. That's for people who don't know how to do accounting. But then I read the book, and I realized, well, crap, I've been doing Profit First and LedgerGurus for years. Not exactly the way they outline it, but they talk about allocating money into buckets. It's like the envelope method for business. So around that time, I finally decided to read Profit First, the book. And I had poo-pooed it for years because I thought this is a book for people who don't know how to use their accounting or how to read accounting or do accounting. And then I read the book and realized I'd actually been practicing principles of Profit First for years. And they even go into it and say, this is not an accounting methodology. It's really a cash management methodology. For example, I had allocated, not exactly the same way that Profit First did it, but I had been putting aside money for taxes since the minute we became profitable in LedgerGurus. We ran kind of break even for a couple of years while we were trying to grow the business up to a certain size. But then when we started shifting into a profit mode, I had been putting money aside into a bank account every single month. And I've never had problems paying taxes. It was awesome. In fact, most of the time I had too much, and every year I get to, do an extra distribution because I was over conservative. And so I realized
sorry to interrupt, but just a question for those who have maybe not heard of Profit First. You've kind of spoken about it, and I get it because I am familiar with it. But for someone who's never heard of it, can you just explain the concept of Profit First and how it might differ from someone who is not operating on a Profit First approach?
So the way that Profit First works is it says start with profits in mind and back up from there. And it's really a system of constraints. So it's like money comes in, you immediately allocate money into different accounts. So you're putting money into a profit account, into a owner pay account, into an operating account, into a tax reserve account. I think those are the key ones. I've gone a step further. I usually do an inventory and fulfillment account. You can go crazy. This is one of the criticism of Profit First is sometimes you'll go into somebody who's doing Profit First and they'll have 20 accounts, they'll have 20 buckets.
Ooh, wow.
And I haven't seen that, but I've heard of it. But the idea is I have to operate off of the cash on hand. Now, where I feel like Profit First does not do well in the e-commerce space is that model works really great in a services business where there's no cash flow issues. When you get into a cash constrained business like e-commerce, it's challenging. The other thing is they would preach like, don't use credit cards. I'm like, I don't know how to run all this tech not on credit cards. So as I've applied it over the years, I've kind of looked at this resource constraint model, layering in accounting to help understand what the real constraints are. What are we spending against that constraint? Is what we're allocating meet what we're spending? Really tighten up that cycle. But the idea is using this theory of constraints. You're like, I can only spend so much. What am I going to do to achieve those outcomes? And I think fundamentally for a consumer product business, e-commerce business, it's marketing efficiency. Because a lot of the other things are somewhat fixed. You can try and improve them. You can try and improve your fulfillment costs. But what you get out of your marketing, it can be a little bit of a black box. And that was where we were losing it in our business. And we just told our partner, dude, I sent him the book. He read it. He's like, yeah, let's do it. We got rid of all the agencies. We got rid of almost all the creatives. And Brittany, our other partner, she was just like, Preston, you're a marketing guy. Go figure it out. Like, just do it yourself. Like, we're too small to be paying for agencies at this point. And so he did. He just rolled up his sleeves, got into the weeds on, Meta and Google advertising and figured it out. And we got profitable. And I'm a big fan of it. Like, I think it's easier said than done. Like, if it was easy, everybody'd be doing it. Yeah. But I do think there's some core principles that any size of business, whether you're using the Profit First methodology or not, that profit mindset and understanding that you can't spend unlimited dollars to achieve outcomes, that you have to learn to operate in limits and understand those limits. And I think when you can couple that mindset with good accounting and financial strategy, it's killer. Like you've now created a killer combo. Is it going to guarantee success? No, but it's like, I don't know. It's like before, to come back to that question around, is accounting and finance just a cost center? It's kind of like when you look at it that way, it's kind of like you're walking around with a blindfold on. Can you navigate the world without seeing? Sure, we see a lot of blind people that can do it, and they become pretty adept. But being able to see, it's a game changer. You're just going to be able to move faster.
Yeah, absolutely. So you work with a lot of brands, like hundreds of clients. You are deep in this ecosystem, and you have been for many, many years. I'd love to get your thoughts on what you see as some of the biggest challenges for the industry in 2026. Like, if we're having a conversation with you again a year from now and reflecting back on what happened in 2026, what do you think we'll be talking about as the big themes of the year?
We've been experiencing years of challenges after years of not challenges, right? It was just growth for so many years. And I feel like what we're dealing with is just layers of challenges that have been added 1 year at a time and have never really gone away. So I feel like it started with the changes in marketing efficiency. That changed with iOS 14.5. I think that was 2021 or 2022. I can't remember exactly when it took effect. So marketing got more expensive. And then inflation hit. And with that, increased interest rates. So now not only am I dealing with constantly increasing costs, I'm also dealing with more expensive capital. And you talked about this, right? That money was cheap. Now it's not cheap anymore. And then we've got tariffs. So as I look at 2026, I think this is the first full year we're going to realize this tariff shift. That's, I think, one thing. If you look at 2025, yes, tariffs were announced, but they didn't get put into place till later in the year. And in reality, we are just now starting to sell inventory that was fully tariffed. So what is the full impact of tariffs? The other thing that I'm thinking about very much is what's going to happen with the consumer. There's such divergence in the economy and divergent forces. And everybody's talking about a K-shaped economy, which is you've got two things going on. You've got things are going pretty good for those on top and going pretty poorly for those on the lower end of the economic scale. And it feels like it's just getting worse. I also wonder if who it's affecting is creeping up. It used to be a certain economic threshold, and I feel like it's getting harder for those that are making more money. So I'm really curious about consumer demand, what that's going to do to sellers, and how they're going to be able to navigate that. Those are some of the things that I'm most concerned about is the ongoing impacts of tariffs, and then this economic force. Is it going to tip over? Are we going to grow out of it? It's been a hard couple years for consumer product businesses, but we technically haven't been in a full recession. If these headwinds actually put the economy into recession, how would we navigate that as an industry? Because let's be honest, the COVID dip was technically a micro recession, but it was short-lived, and then it turned into a boom. So we haven't really seen a full recession in this country since, what was it, 07, 08? Long enough that we've got a generation that doesn't even know what it is to go through a recession. And we have an industry that really has matured in a up economy. So I'm really curious, and if it's not this year, when is it going to be? But how will consumer products do through recession? And we've kind of felt that to a certain degree. So I think the last couple of years have hopefully built up some muscle. But if we were in a full-blown recession, how would you as a seller navigate through that, knowing that your consumer's trying to pay rent, not buy, cool things that you're selling? Those are the things I'm thinking about a lot.
Very interesting. It's certainly not the game it used to be. Definitely gotten a lot harder over the last few years.
And everything goes in a cycle. I think we've been in a hard cycle. I keep waiting to come around back to where it's not so hard. I do think because I feel like, we're now let's say we start with 2022, we're now 4 years into hard for e-commerce. It would be nice to get back to where things weren't as hard. And there's some things, I talked about some things that I think are headwinds on the opportunity side. I'm really interested in what's going on with AI advertising, with AI commerce. I think that is to me, that's the thing that I am most excited about is agentic commerce, AI advertising. What is that going to do? Is it going to be, the next big wave, or is it going to be Snapchat, right? It's just that was cool. Some people got a little bit of sales out of it, but it hasn't really materialized as a real channel. But I think AI hits so many different ways, whether as an ad platform could be done right. It could be really interesting as a path for selling. Shopify and Google released the new protocol that allows stores to be automatically able to sell. You don't have to be on Shopify. You just have to plug in. And this hasn't been fully launched. It's like being tested. So I'm really curious to see where this goes, because I do think, as I've kind of tested shopping on like ChatGPT, it's really transformative. And where does it go? Like I've heard some people talk about, is there a future not only where I'm using these platforms to find the right products and buy there? What's the next step? Now I've got agents who know me, and I say, here's my budget. Go buy me $100 of apparel, $100, $200, $300 of apparel this month. And it just goes out and finds stuff for you. To me, that's a big step forward. We're not anywhere close to that, but I could see how we could get there. And that's really interesting from an e-commerce perspective. If consumer behavior goes that route and you can ride that wave in the right way, put all the other headwinds aside, that could be a really big game changer for brands. Yeah. So I think there's challenges, but there's some really exciting things, and I'm most excited about what's going on in AI and agentic commerce.
Very interesting. Very interesting. Yeah, it's going to be a wild ride the next couple of years. Fun to be in the front row seat, I guess, and seeing all these changes unfold in front of us. But Stephen, this has been a really enjoyable conversation. Nice to have been able to flip the script and have you on to talk about your perspective on the industry. It's not often that I get to talk to people who have such, broad perspective over so many brands. Like, I'm not going to repeat the number, but you told me before we started, like, how many clients you have, and like, it's a freaking big number.
Yeah.
You guys work with a lot of brands, and so you see a lot of these situations and data. So I appreciate you coming on and sharing your perspectives. Before I let you go, where should people go if they would like to either get in touch or learn more about what you're up to?
So obviously our website, ledgergurus.com, but we also have been really big into content marketing. So we have a YouTube channel. We have a podcast, the e-commerce finance podcast. We do a lot on social, so you can see a lot of our content there where we'll share our thoughts and ideas.
Amazing. Thanks so much. I'll include those links in the show notes below if anyone's interested. And thank you again, Stephen. Great having you on.
Thanks, Nate.